case briefs, and so much more. LSData's got what you're looking for.
In a 1994 case heard by the District of Columbia Court of Appeals, Bank Fund Staff Federal Credit Union v. Cuellar, the court focused on the strict rules banks must follow when foreclosing on a home. The foreclosure notice must give homeowners enough time to cure any default and inform them of their rights, and banks cannot include unsecured debt in the amount the homeowner needs to pay to avoid foreclosure. The Bank Fund Staff Federal Credit Union filed a foreclosure notice against the Vivados, who had fallen behind on mortgage payments. The notice, however, did not include the correct information about how much the Vivados needed to pay to cure the default, nor did it inform them of their right to cure. In response, the Vivados obtained a preliminary injunction to prevent the foreclosure, and the court ruled that the notice was invalid. Despite the defective notice, the bank fund purchased the property at the foreclosure sale. The Vivados argued that the sale was invalid due to the flawed notice, and the court agreed. The court stated that the notice must include the cure amount and provide adequate time for the homeowner to cure the default. The bank fund countered by arguing that any rental of the property disqualified it as a residential mortgage. The court rejected this argument and remanded the case to allow the bank fund to show that the cure amount on the notice was accurate. The court held that the trial court needed to determine whether the bank fund's provided funds to pay the first note were secured or unsecured. If secured, the injunction would remain. If unsecured, it would be lifted. The trial court was required to provide adequate findings for appellate review.
Case briefs, and so much more. LSData's got what you're looking for. Visit lsd.law, elevate your mind. Leave the stress of class.